Good morning. Grace and peace to you in the name of Jesus Christ. My name is Dustin Petz, and I serve as the president of the Kansas Methodist Foundation. Thank you so much for joining with us for our 2022 investment forum. Let us begin with a time of prayer. I'm working on a presentation with pastors about their financial wellness, and John Wesley, in his sermon called The Use of Money, he uses a phrase as we relate to our money in the ways of all manner of good, all manner of good. And I think that's quite profound, how we use the resources that we've been entrusted, how we let those resources bring life, and how we take agency to use our money in all manner of good. Let us pray. Gracious God, we give you thanks for this day. We ask and pray for your presence with us as we do ministry across Kansas, as we seek to be in service, to raise up those who are downtrodden, to use the resources that we've been entrusted wisely and to deploy them to make a difference. Help us to know that you bring new life through us, and that we have an opportunity to use well what we have, our time, our relationships, the resources that we have for your glory, for your kingdom. We ask and pray your blessing upon us today as we meet upon the presentation that our team from Wespath is going to be offering, and the ministries of all those who have gathered here. Pour out your spirit upon us in Jesus' name. Amen. On the next slide of our presentation, you'll see the kind of general outline. I'm going to start and give a little bit more information about the Kansas Methodist Foundation. And Karen's going to share some about the investments that we have available in partnership with Wespath. And then we'll have a kind of Wespath's top things to be looking at in 2022. Again, if you have questions or whatever, you're free to put those in the chat box, and we'll try to field those along the way. On the next page, so let me just give a bit of an introduction to who we are as the Kansas Methodist Foundation. We seek to empower faithful people, churches, organizations, institutions to imagine what's possible in ministry and doing what God is calling you to be about, and to help partner with you to make those a reality. The Kansas Methodist Foundation was started in the mid-1960s by the two conferences of the Methodist Church here in Kansas. We continue to grow and serve churches, related institutions throughout Kansas, as well as the families that are a part of these congregations. A few years ago, actually in the spring of 2019, we began the process of the foundation becoming separate from the Great Plains Conference, so as to serve more broadly United Methodist churches and related institutions, agencies, as well as others within the broader Methodist movement. Maybe you have noticed that we have done some work to rebrand ourselves and are in the process of updating our name to be the Kansas Methodist Foundation. We know there's conflicts within the denomination, and we're committed to serving all of those that we have been serving that are within the Methodist movement, to be able to hold a donor intent and to be partners in service of a variety of ministries and holding to those agreements in fidelity. And so we're excited about that work that we're doing and the opportunity to continue to build relationships across our state of Kansas. One thing to note is we, at the end of the year, had 76 million of assets under management with our partnerships. And in 2021, we grew that by nearly $15 million of new deposits. I think a lot of this is our partnership with Wespath and the efforts that we've been doing to engage with entities across the state. And some of you are a part of those new relationships. And so we thank you and we welcome you in our work. On the next slide, on slide 4, there's kind of some of the different things that we do. I often summarize the efforts and ministries that we do into kind of 3 areas. One of which is to provide sustainable and socially responsible investments in concert with the United Methodist Church's values, the social principles. And we do that with this partnership with Wespath, which is the big focus for our effort today, is to talk about that. But we also do efforts of leadership development, preaching and teaching, training for churches and other agencies across the connection about how to be financially healthy, how to grow resources, to have the resources to do the ministry that God is calling you to be about, and to engage in your congregation or constituency to help them be generous and to leave a legacy to support ministry for generations to come. And then the third one is really just to help individuals relate to their resources, to be generous with those resources in life by offering different means to do that, and also in their way of planned giving. We have great capacity for us to use what we have been entrusted to make a difference in the world around us. And our role is to help encourage that, to develop those relationships, and then to steward gifts that are given, to support a local church or a camp or a college, ministries that are important in our connection, even other 501c3s, and to do so to the glory of God and to honor people as they give. We are super excited to have you with us today and to be able to share in this time. And it's my great joy to welcome Dave Zellner, the Chief Investment Officer of Wespath, and Karen Manczko, Director of Institutional Relationships. She's the person who serves our Kansas Methodist Foundation and our Kansas partners. We moved our foundation resources to Wespath Institutional Investments in the fall of 2019. And it has been a great relationship, really allowing us to make a unique offering to our partners here in Kansas. And so we welcome Dave and Karen. Karen, I think you're going to go first. Welcome.
Yes, thank you. Thanks for the introduction, Dustin. And it's such a pleasure to be here today. And we also appreciate you all taking the time out of your busy schedule to join the webinar. And it's great to see so many familiar faces on the Zoom call as well. My name is Karen Manczko. As Dustin mentioned, I'm the Director of Institutional Relationships and have been servicing the Wespath relationship with the Kansas Foundation since they hired us. I'm going to be talking about Wespath, our organization. I'm going to talk about the foundation's investments that are available to their investors. And then I'm also going to highlight our sustainable investment stewardship activities. As Dustin also mentioned, Dave Zellner, Wespath's Chief Investment Officer, is also with us today. And he's going to be providing an update on Wespath's top 5 things that we are watching for in 2022. I'll pause throughout my update and take questions. Dave will also pause too. So please feel free to put your questions in the chat, and Dustin and I will get those throughout our presentation. So starting off, before I talk about the foundation funds and their performance, I want to provide an overview regarding Wespath and our philosophy, and talk about some of the investment managers that we have hired to manage investment strategies on behalf of our United Methodist investors. So Wespath Institutional Investments, we are a nonprofit subsidiary of the general agency, Wespath Benefits and Investments. We are an independent, self-funded agency of the United Methodist Church, and we have been around and have served the church for over 100 years. We are recognized as the largest known faith-based investor of plan assets, with more than $29 billion in assets under management. And we use the scale of the $29 billion to invest in world-class investment managers and strategies, and allow our clients access to those managers through investing in our multi-manager funds. We're also a leader in sustainable investing, and we do this not only because we believe it's going to create a better world for us to live in, but because we believe it's going to create better long-term value for our investors. And that's important to us as a fiduciary. The advantage of working with Wespath and the foundation is that the foundation provides that local client service support, because they understand their investors and their potential investors and their unique needs. In turn, the foundation invests your assets with Wespath, and we strive to deliver our clients long-term competitive returns through our multi-manager investment approach. So through investing with the foundation, you not only get access to areas of the market and individual investment managers that would be difficult, if not impossible, to access on a standalone basis, but you also can confidently ensure that your investments are aligned with the United Methodist Church values. So before I talk about our diversified investment funds, I do want to briefly talk about Wespath's 10 investment beliefs and some of the external investment managers that we work with. The slide on the screen is showcasing those 10 investment beliefs, and I'm not going to go through all of them, but I do want to highlight a few that speak directly to our investment philosophy. First and foremost, investor focus. Our investment activities must support the financial well-being and mission of our institutional investors. I mean, you are all at the forefront of everything that we do. We also have a long-term perspective on the markets. As we've seen in the last few years, and even in 2022, just this month and a half, the markets are volatile, and typically financial returns can revert back to long-term averages. Thus, having that long-term focus on risk and performance will benefit our investors by keeping our portfolios fully invested. One thing we are not is we are not market timers. Also, diversification. We believe in global diversification across a broad range of asset classes, investment styles, and asset managers provides optimal risk-adjusted returns to our investors. We employ roughly 25 external investment managers within 20 distinct asset classes and investment styles. So these funds are very diversified that the foundation offers to their investors. And then the last one I'll highlight before I move on is sustainability. Our approach to sustainable investment honors the mission, the vision, and the values of the United Methodist Church. The intentional integration of environmental, social, and governance factors in the selection of the management of our investments positively affects long-term performance. And looking at some of those investment managers that we work with. So this slide highlights just a few of those managers that I highlighted a little bit ago, the 25 external investment managers. So you can see, looking at that first column on the left, is that we invest in well-known names in the investment management industry. JP Morgan, PIMCO, Northern Trust. These are not mutual fund investments, but we have relationships with these firms and have created customized strategies that fulfill particular mandates that we've hired them to manage on behalf of our investors. Looking at that middle column on the middle of the slide, another one of our 10 investment beliefs that I didn't cover on the prior slide is low carbon transition. And these strategies seek to maximize the opportunities and minimize the risks that are associated with the transition to a low carbon economy, which is underway. So as of the end of the year, end of 2021, we had over $3 billion allocated to these low carbon solutions with well-known investment firms that you can see. And then finally, on the far right, we also seek to identify qualified investment firms that are women and minority owned. We have over $2.1 billion invested with these firms. Two of our longest standing relationships are Brown Capital Management and Zevenbergen. And we hired both of these managers in 1994. Therefore, we have had long-standing partnerships with them, and our funds have benefited from these partnerships for many years. I'll pause here to see if there's any questions, Dustin, before I move on.
Well, I have a question. So confirm, Wespath does not use mutual funds or index funds. You own the underlying assets so as to meet the requirements of what you're talking about next. Can you explain that?
Yeah, correct. So we do not invest in any mutual funds or exchange traded funds. Some may think of PIMCO, their well-known core bond mutual fund that a number of institutional investors invest in. So the strategy that these managers manage for us is we're actually owning the underlying securities of the fund. So they're constructing a custom portfolio for us and owning the underlying assets. I mean, this is essentially the only way that we can confidently ensure that our investments are aligned with United Methodist Church values. So moving on, that's a great seg into the next section. The final section before I talk about the individual foundation funds is about our sustainable investment program and how we incorporate the values of the United Methodist Church into our investments. Paragraph 717 in the Book of Discipline asks us to discharge our fiduciary duties solely in the interest of our participants and beneficiaries with care, skill, prudence, and diligence. We also are asked to make a conscious effort to invest with the goals outlined in the social principles. And you can see that information listed on the slide. And the framework that we use to implement these investment directives and our sustainable investment framework is invest, engage, and avoid. So the invest part, that first pillar, is where we deploy capital to earn a competitive risk-adjusted return. The engage, the middle pillar, this is where we use our voice as a large shareholder to encourage companies to adopt sustainable business practices. And then final is avoid. And this is where we avoid investing in companies based on the areas that are outlined in the Book of Discipline. And you can see those areas highlighted on the screen. So first, looking at the invest pillar, part of the deployment of capital to earn a competitive risk-adjusted return is through those low carbon investments that I highlighted earlier. And also part of the way that we do that is through our internally managed positive social purpose lending program. And this program provides affordable housing and community development in disadvantaged areas. And you can see the highlights of this program that is highlighted on this slide. In the state of Kansas, we have roughly $1 million invested. And one of the properties in your state is called Bethel Estates, which is located in Gardner, Kansas. And this is an affordable housing property that supports seniors in the community. We also, we are investing in local communities and having an impact. And through investing with the foundation and investing in their funds, you also can be part of this impact that we are having. The final slide before I talk about the foundation funds talks about our sustainable investment framework, is the middle pillar, that engage. And this slide highlights a number of engagement successes that our organization has had. Unfortunately, I don't have all day to cover all of these, as much as I love to highlight the work that we are doing with corporate engagements, but I do want to highlight a new engagement initiative. Some of the viewers and listeners today have heard about our engagement efforts with the pharmaceutical industry, particularly as it relates to opioids. We have joined forces with the Investors for Opioid and Pharmaceutical Accountability Working Group, which is a coalition of institutional investors that represent roughly $4.2 trillion in assets under management. And what this group does, and part of our work with them, is engaging the drug manufacturers, distributors, and pharmacies on the risk of opioids to society, the economy, and also shareholder value. Our engagements with these companies focus on workplace safety protocols, board governance and independence, compensation plans, and so forth. Also, we're working with these companies on creating an opioid disclosure report, which will allow us to acquire information on the opioid-related risk from pharmaceutical distributors, manufacturers, and the retailers. So I'll pause there, Dustin, to see if there's any questions before I talk about the foundation's investments.
Yeah, so there is a question. The question is, how stringent are the guidelines for SRI? Percentage of a company's revenues, what are the guidelines?
So the guidelines that we use is 10% of gross revenues, whether it's from those six, let me just move back to the slide. So whether a company gets 10% of their gross revenue from these activities. So that's the criteria that we use.
Thank you. Mm-hmm. There are no other questions. I think it's just honorable that you're doing good with the money as well as making good returns. Thank you.
Yeah, thanks, Dustin. So moving on to my final portion of the presentation before I turn it over to Dave, I'm going to review the performance for each of the Kansas Foundation funds that they offer to their investors for investment. And starting on the screen is the Balanced Fund. The Foundation's Balanced Fund is invested 100% in Wespath's flagship balanced portfolio, the multiple asset fund. This fund has a long-term strategic allocation of 65% equities and 35% fixed income. So you can see on the slide the allocation the balanced fund has to each of the Wespath funds. On the bottom of the screen, you can see the net of Wespath fee performance of the balanced fund versus the fund's benchmark. I always want to note is that we are showing you the net of Wespath fee performance, whereas that benchmark directly below does not have a provision for fees. We also added in a third line, and it's titled Lipper Median. So the returns in this line are the median returns of a comparison of balanced mutual funds. So for instance, this shows how the foundation's balanced fund compares to a comparison of balanced mutual funds that are on the market. So as you can see, despite the foundation underperforming for the 1 year, the fund is outperforming the benchmark and the mutual fund comparison across all time periods. So for instance, looking at the longer term, the 5 year, the balanced fund returned 11.7% net of Wespath fees, and a comparison of balanced mutual funds returned 9.3%. So with this said, the balanced fund outperformed by 2.4 percentage points. The next slide is the Kansas Equity Fund. And this slide, this fund is a global equity portfolio. So it has allocations to both US and non-US stocks. It also has allocations, a modest allocation to international and US private equity and private real estate. So it does have that allocation to alternative investments. So you can see the allocation the equity fund has to each of the Wespath funds. Similar to the slide before, we are showing the equity fund performance net of Wespath fees and measuring it against a benchmark that doesn't have a provision for fees. And then that third line, that Lipper median, is looking at a comparison of global equity mutual funds. So as you can see, the equity fund has outperformed the benchmark in comparison across all time periods, with the exception of that 1 year. And what impacted that 1 year return relative to the fund's benchmark was the US equity funds underweight to mega cap stocks. And when I think of mega cap stocks, I think of Google, Facebook, Apple, and Microsoft. And those funds performed, and those stocks performed well last year. I believe they're up almost 36% alone, just those 7 stocks that we refer to as mega cap stocks. But this year so far in 2022, we've seen those names pull back, which has been a contributor to the fund performance year to date. So moving on, the last 2 funds before I turn it over is the fixed income fund and the short-term investment fund. So first, starting with the fixed income fund, this is a global fixed income portfolio. The fund is invested in dollar and non-dollar denominated bonds. So relative to the fund's benchmark, the fund is underweight US Treasury and government bonds, and in favor of having an allocation to non-US bonds and an overweight to high yield bonds. This fund also has an allocation to the internally managed positive social purpose lending program, which I highlighted just a minute ago. So you can see the net of Wespath fee performance on the slide compared to the fund's benchmark, and a comparison, and we're using for that Lipper median a core bond mutual fund comparison. So you can see that for the 1 year, the fund performance was relatively in line with the benchmark and the comparison, and then outperformed the mutual fund comparison across the longer time periods. And then finally, the last slide before I move it over to Dave is I want to highlight the foundation's short-term investment fund. And the short-term investment fund seeks to provide a lower risk investment option for the preservation of capital. You know, this fund is an option for shorter term investment needs, such as renovations, capital campaign pledges, any sort of near-term investment need that you and your entity may need. This fund is invested, as you can see, in jumbo CDs, timed and flexible demand notes, and also invested in Wespath short-term investment fund. And you can see the performance of the fund right there. So I'll pause before I turn it over to Dave to talk about the 5 things that we are watching out for in 2022. I'll pause and see if there's any questions before I turn the microphone over.
One question came in the chat. And it is, what is meant by competitive risk-adjusted return? You use that language.
So when I think of, and Dave, I'll turn it over to you if you want to add anything to this, but how I think of competitive risk adjusted returns is I think of competitive not only when I compare it to a benchmark, which we refer to as like a market return, but I also want to think of it as comparisons of our peers. So not only outperforming the market, but also outperforming your peers in that capacity, and doing it in a way where you're not taking on more risk than is intended to take on. And Dave, I'll turn it over to you, see if you have anything to add to that.
Yeah, Karen, I think you covered most of it. I think the only thing that I would add is that some investors may take a lot of risk, and in periods like 2020 and 2021, which turned out to be really good years in terms of performance, despite the COVID pandemic, if you took on a lot of risk, you had very good returns. And if you were more risk averse, you had fewer returns. And depending upon an institution's risk appetite, they may decide to keep a low risk profile. And so what we're just trying to do by talking about competitive risk adjusted return is to normalize the returns that we report relative to the risk that we are taking on in our investment funds.
Thank you.
Dave.
One other question came, does KMF, the Kansas Methodist Foundation, anticipate offering the alternative fund? We're actually going to speak about the alternative fund offering that Wespath is going to make available towards the end of our presentation. I think the foundation board is still considering that as an option. There are other funds that Wespath makes available. And what we offer are, for the bulk of our partners, there's maybe some openness to have conversations with some of the larger institutions or agencies so that we can offer things that meet your needs. So we'll bring that up in a moment. Sounds good. No, you didn't get ahead. You're okay. Thank you.
With that, I will turn it over to Dave.
Thank you, Karen, and thank you, Dustin. And it's good to be with you all. Each year, what I try and do is identify the near-term and long-term risks and opportunities in the market. Now, for our webinar today, the focus is primarily going to be on the near-term, mostly risks rather than opportunities that we're facing in 2022. With regard to the long-term risk and opportunities, I'll very quickly cover those. One, we see an opportunity with the developing world, notably the Belt and Road Initiative implemented by China. And I will talk about that a little bit later. Second risk we do see is particularly in the United States, is the extent to which we have meaningful unfunded retirement obligations, notably at the state and local level, but also at the federal level, with Social Security forecasted to run short of funds just in about 10, 15 years. Another opportunity is disruptive technology and the extent that it's creating efficiencies in the marketplace and creating many opportunities to take advantage of those disruptive technologies. A fourth risk and opportunity is the transition to a low carbon economy. We do think that the world is headed and made a commitment to achieve net zero greenhouse gas emissions by 2050, and there will be lots spent and a lot of opportunities to take advantage of that transition. And that's something that we want to make sure that we're positioned to take advantage of as well. And then finally, in terms of a risk, are sociological challenges that we face as a world, notably inequality, and another example would be drug overdoses. Now, in transitioning to near-term risks, I do want to focus on the good news. And so initially, the forecast for growth in 2022 and 2023 is constructive. Last year, as you can see, in the United States, we had 5.9% economic growth. At least that was the first reading regarding the real gross domestic product increase in the United States. And we did in the advanced economies see roughly a 5% increase and a 6.5% in the developing economies. Looking forward to 2022, the expectation in the US is for the economy to grow 4% and nearly 4% in Europe and close to 5% in the developing world. Now, I have seen some reduce their growth forecasts because of the start to the year and the impact that Omicron has had on the economy. But I still believe that we should see between 3 and 4% economic growth going into 2022, and that's certainly positive. The long-term trends in the US, the expectations would be for economic growth of about 1.5 to 2%. Now, also, on the next slide, we can see that we have low US unemployment rates as well as initial unemployment claims. Notably, we did get to about 15% unemployment at the peak of the pandemic, and now we're down to 4%. We had gone down to 3.9%, but we ticked a little bit up to 4% in the month of January. But notable, even though we've seen a meaningful increase over the years in terms of the US workforce, our initial unemployment claims remain below the 50-year average. So that's certainly positive news. Next, on the next slide, we do see that because of a rise in home prices, as well as the rise in financial assets, we've seen significant increase in both owners' equity as well as net worth of individuals. And when people feel as though that they have strong net worth, they tend to spend more, which would support the notion that we'll see good economic growth in 2022. In addition, on the next slide, we see that corporate profit growth for the next 2 years is forecasted to be reasonably good. We, of course, in 2021 saw significant growth in corporate profits, bouncing back from 2020. But in 2022, the expectation is that we should see mid-upper single-digit growth and then around 10% earnings growth in 2023. And then finally, in terms of good news, we've seen in the third quarter of 2021 record levels in terms of stock buybacks, and the expectation is once the fourth quarter numbers are reported that it will be at or exceeding the level for the third quarter. And so far in 2022, we've seen a number of companies announce formal multi-billion-dollar stock buyback programs. So I think it's fair to say, if we do continue to have the economic growth that's been forecasted, that we're likely to see companies continuing to buy back stocks, and that could provide, would expect it to be provide, support to the stock market. So now in terms of the near-term risks, the first one I'll focus on, which is one I think we're all well aware of, and that's inflation. Now, to put inflation in context, over the entire history of the United States, average inflation has been just a bit under 1.5%. We're not accustomed to seeing long-term high levels of inflation. There are, of course, periods where we have high level of inflation. And the period that some of us experienced, those of us that were alive during 73 and 82, that 8.7% average inflation rate during that 10-year period was the highest 10-year period for average annual inflation ever experienced in US history. Notable also at the bottom of the chart is that from the beginning of the country to the beginning of the 20th century, there was no average inflation. Now, again, there were years where there was positive inflation. There were years where there was deflation. But over that period of time, inflation was zero on an average basis each year. So when we look at 2021 and what led inflation in 2021, Notable was the energy sector. Gas in particular was up nearly 50% in 2021. And we also saw a significant increase in used car prices. Now, in the next slide, if you look at what makes up the Consumer Price Index, which is the measure of inflation that most of us are accustomed to, you can see that housing and food and beverage account for almost a little more than half of what makes up inflation. Now, even though we did see in 2021 an increase in inflation attributable to energy and things like used cars and new cars, recently we started to see an increase in prices that affect everyone every day, and that's food and shelter. Notably, the last month in January, we saw nearly 4.5% rise in shelter costs. And I've recently seen reports that rents in major metropolitan areas, in some major metropolitan areas, are expected to increase 30% in 2022. We've also seen a significant increase in food prices, with January food prices up 7%. Medical care, however, continues to remain relatively subdued at around 2.5%. Each month, the University of Michigan conducts a survey of consumers and asks consumers the extent to which they expect inflation to increase in the upcoming year. And we're now at an expectation of 5% for 2022. Now, I should say that historically, consumers have expected more inflation than actually incurred. But as you can see, the expectations have continued to rise.
Dave, a question I have is, what are you attributing this inflation to? Is it supply chain issues, worker shortage, maybe all of the above? Or, I mean, does it look like inflation's here to stay? Or do we think that with raising rates, it could get back to a normal level?
Yeah, I'm going to blame the pandemic. Not necessarily directly the pandemic, but the reaction of people to the pandemic. So what we buy, where we live, how we work, all of that has changed, and it's changed in a big way. People are buying things, they're moving their homes, they're upgrading their home offices. From working at home, they've identified things in their home that they want to change, they want to fix, they want to upgrade. And so what's happening is, and there's been a pretty significant stimulus, lots of money printing by the Federal Reserve, as well as economic stimulus from Congress that have put dollars into people's pockets. And so they're taking advantage and buying things at a pace that they previously hadn't purchased before. Now, the question also touches on the issue of supply chain, to the extent that demand for certain products have increased and that there was insufficient supply to meet that demand. Part of it was just excessive demand relative to what the trend was, but also when you look at China, China's had a zero COVID policy. And so if there has been any signs of the coronavirus in any of the Chinese cities, they shut down the cities. A statistic that people are not necessarily aware of, and I'm not going to include the last few days, but prior to the last few days, the US had more coronavirus cases in one day than China has had throughout the entire pandemic. And that's because they've been very strict in locking down their countries whenever there's been locking down cities, whenever there's been a sign of the pandemic. So the pandemic has changed people's buying habits, increasing demand for materials in short supply. One other factor is a labor shortage. We've had a significant reduction in the number of people in the workforce. And so we've seen a lot of people quitting their jobs, and wages have gone up. And so it's likely that this will continue at least through 2022 and perhaps into 2023 until we've been able to attain equilibrium.
A question, Kim's in the chat, and if you want to address it now or later. Robert Schiller speaks to narrative economics and how narratives affect consumer behavior. Do you see these near-term risks becoming larger narratives that create major headwinds, or these noise that hide the underlying trend? How dependent are we on the consumer and their sentiment?
I do think that to the extent that consumers believe that inflation will continue, there will certainly be pressure on employers to increase wages. And to the extent employers increase wages, you would likely see that flow through to the products and services that they provide. We've also, I've touched on the second risk in 2022, which is what I'm calling the Great Transformation. We've seen a number of people, record numbers of people leaving their jobs to go to other employers offering higher pay. And to the extent that you have this spiral of higher wages, it is likely to continue to fuel inflation. Now, despite high inflation, we still have relatively low interest rates, as you can see on this next slide. The US, many people look to the 10-year US Treasury note is like the benchmark of US interest rates. It's the 10-year note that people focus on. And up until recently, the rate for the 10-year note was meaningfully lower than it is today, which it's a little bit over 2%. But as you can see on this slide, in the English-speaking companies, core Europe and the Europe periphery, interest rates still are relatively low to historical levels. And on the next slide, when you compare those interest rates relative to inflation in those countries, you can see that there are significant gaps between interest rates and inflation, which means anyone with low risk savings is losing out to inflation. The purchasing power of your dollar today, if it's invested in low risk government bonds, is going to be a lot less a year from now, given current inflation rates. And we're also seeing pressure on housing prices. The most recent month reported by S&P, the Case-Shiller index, which was November, showed housing prices up nearly 19%. But then the number of houses available for sale has declined significantly. So we've touched on the Great Transformation in response to the question that was raised regarding what's likely to happen with inflation. And as I mentioned, we did have record numbers of people quit their jobs in the last month. And we also have a record number of job openings. So there's this big gap in terms of what is available for jobs and who's available to take those jobs. And given the fact that folks are able to work from home, they now have a much broader geography to which to consider taking a job, to the extent that many businesses are now going to 100% remote work. And I would imagine some of you on the webinar, your organizations, or you know of organizations that have gone to 100% remote work. Another factor is that has contributed to inflation and has contributed to these supply shortages is a chip shortage, which has contributed to a low inventory of automobiles. You can see that the amount of autos that are available for sale is again dropped to historically low levels. And as we talked about, work from home has changed where people are living. So then the third risk is geopolitics. And there are a number on the next slide that the world will continue to be watching. Of course, the last couple of weeks, the headlines have been dominated by the crisis in Ukraine and the extent to which Russia has moved 130,000 troops at some counts to the Russian border, or to the Russian-Ukraine border and the Belarus border. Now, the news that came out earlier today was somewhat positive in that there were reports, although not necessarily confirmed by Russia, that they've moved, not necessarily confirmed by US intelligence sources, that the Russians have moved some of their personnel back from the border. And at least at the start of this webinar, stocks had responded positively. But we continue to have trade tensions. We continue to deal with the nuclear ambitions of Iran and North Korea. Cyber attacks are continuing. US companies continue to be plagued by cyber attacks, but it's not limited to the US. Last year, we had meaningful natural disasters, and the expectation is that we'll continue to have floods and other types of natural disaster that will wreak havoc. And then last week, also in the news, were the trucker strikes in Canada and rumors of trucker strikes in this country and actual strikes in countries like New Zealand, France, and Holland. And although we have seen some retraction of COVID restrictions, I think it's fair to say that many people are ready to move on from restrictions put in place as a result of the pandemic. Fourth risk or opportunity would be the midterm elections. A lot has been discussed so far, and you can expect the sounds related to the midterm elections to continue to increase into the year. As I think everyone knows, the Democrats hold a very narrow majority in the House of Representatives, and you actually have a tie in the Senate with the vice president breaking any ties. I think most expect that the House of Representatives is likely to flip in the midterm elections, and there are some speculation that the Senate will also. It all depends on the extent to which it goes in one direction or another regarding the types of policies that might be expected, and that could certainly have an impact on the markets. We won't know much about that actually until after the elections, but I imagine that the polling will start to crystallize what Congress may look like after the elections and what type of policies might be pursued depending upon the outcome of the elections. Of course, here are the major issues that I think voters will likely be focusing on. I think half the country is going to say half of these issues shouldn't matter. The other half will say, yes, they matter a lot. And then the other half of the country will say the other half of the issues don't matter. And the other half of the country will say, yes, they do matter a lot. But needless to say, it's likely that we'll see a lot of ads by the various politicians running for office to address a number of these issues. And then finally, I do think that there will be a focus on China and what takes place in China for a number of reasons. This next slide demonstrates the extent to which I think it's important that we do pay attention to China, in that it's just too big to ignore. Now, on the left, you see a map of the United States, and I've highlighted the 10 cities in the United States with a population over 1 million. In China, you have 10 cities with a population of over 10 million, and you have more than 120 cities with a population over 1 million. So it's really a significant economy that's just too big to ignore. Now, as I mentioned earlier, China has a major initiative that's called the One Belt, One Road Initiative. And what they're trying to do is to provide an overland infrastructure, railroads, warehouses, and then an oversea infrastructure, notably ports, that will deliver goods and services to the west of China, Eastern Europe and beyond, in particular, Africa. I don't have a slide here, but recently I encountered a slide that showed the extent to which each African country sourced goods and services from other countries around the world. In just 20 years ago, China was hardly noticeable on a map of Africa as the leading provider of goods and services to countries in Africa. Whereas today, China is the dominant country across Africa in providing goods and services to various countries on the African continent. There's still more work for China to do with the Belt Road Initiative, but it is a major endeavor on their part to expand the offering of goods and services to countries to their west, and they are determined to become a major economic power. However, on the next slide, you can see that there are myriad issues that China is continuing to confront. As I mentioned earlier, they continue to have a zero tolerance policy for COVID and will track individuals, keep cities locked down to prevent any transmission of the virus within their country. There continue to be discussions of the extent to which China has ambitions to bring Taiwan back in under the control of the central authority in China. Hong Kong, even though it is under the authority of China, is treated supposedly as an autonomous area in China, although those in Hong Kong feel that their autonomy continues to be restricted and there continue to be protests. In 2021, there was significant attention placed on the property sector, and notably a company in particular that had racked up significant amount of debt, and it's been unable to service that debt. And the concern is that there will be contagion to the rest of the property sector that could have a significant impact on the wealth effect in China, since a lot of individuals and families in China own property, and it could have adverse impact on their wealth if they see a significant decrease in the value of their properties. Of course, we have heard about the controversies regarding the treatment of the Uyghurs in China, and there will continue to be pressure from the international community on China to address human rights concerns in certain parts of the country. And then last year, we did see poor results in the Chinese stock market. While the US market was up over 25%, we saw a decrease in the China stock market of 20% or more. And a lot of that's attributable to increased regulation by the Chinese authorities. So there's still a concern that that regulation can continue to expand and have an adverse impact on the market.
Dave, you read my mind. That was a question I was going to have is what kind of opportunity are we seeing, our managers seeing in China, given the weak performance last year? And it looks like we still could see some, things haven't really changed much this year so far. And so what does the opportunity look like from an investment perspective in China?
Yes, to the extent that we're seeing continued movement from the rural areas to the city areas, the focus of our managers is on consumers, notably the retail sector, primarily available through the internet, as well as the health sector. There are significant advances made in China in terms of health and in health treatment. And that's where the managers are tending to focus. They're less interested in the Chinese state-operated enterprises, such as the oil and utility and the telephone, and less interested in the Chinese financial sector. The primary focus is on the services and goods that consumers are likely to purchase. And that's where our investment managers are focusing their investments. And then finally, and this is just echoes what I said earlier regarding the opportunities available into the future. One of the things that we do as Wespath is we want to identify the mega trends that are going to influence future economic growth. And we do see that demographic shifts are taking place that is particularly in the lesser developed world, where you've got a movement, you have an increased number of young people that will be purchasing goods and services to help promote their transition into a middle-class lifestyle. There's just this significant growth that's expected to occur, primarily led by China and India, but then also at some point in Africa, as the populations move into the middle class and demand goods and services that are typically consumed by the middle class. We talked a little bit about the world's concern about a changing climate and the behavior changes that people around the world are making in order to reduce their carbon footprint. We are continuing to see, maybe not in this country so much, but in Africa, India, Southeast Asia, a movement towards increased urbanization. We talked a little bit about disruptive technology and the fact that we've seen significant increases in technological advancement over the last few years. And then, given the limitations on the growth in the developed world from an aging workforce and an aging population, and immigration levels that are not at levels that we've seen in prior years, it is likely that the developing world, again, led by India, China, Southeast Asia, Africa, Latin America, will continue to see economic growth exceeding that economic growth in the developed world. So with that, I will pause and see if there are any more questions. And if not, I will turn it over to Karen.
I don't know if this was a question. I'm reading the new question that came in. My assumption, and correct me, but my assumption is this last slide shows things that are impacting your investment strategies long term. What of the short term, things to watch out for in 2022 impact the strategies of Wespath, or do they at a great level?
Yes, Dustin, as Karen reported earlier, we're not market timers. And so while we will not react, we will not try and anticipate how the markets will react to short-term risks. We do want to have an understanding of what those short-term risks are. And we want to inform our clients to the extent that they may have funds invested that they intend to use near term, to the extent that those near-term risks are of a concern to the clients, they may want to dial back their risk again if there are short-term needs for their invested funds. But we do recognize that there will be fluctuations in the market resulting from these near-term risks, but we are very constructive about the long term and the opportunities for investing long term, and we continue to remain invested in anticipation of the economic growth that we see going forward.
Yeah, I would echo that. I think a lot that we see is when I think about 2020 and what transpired with the market decline and with COVID-19, I don't think anybody would have anticipated the short time period it took for those markets to turn around. And I know there were a lot of investors that likely pulled out and sat on the sidelines thinking, we're going to be in this pandemic for a while. I'm just going to hang out here while the market's volatile. And we saw the market turn around as quickly as it declined and just saw unprecedented gains the last 2 years. So I think it's really important. And what I always like to focus on is the disciplined long-term approach to investing and maintaining that lens and wearing that hat, because I think it's a very difficult game to play in market timing, and it's important to just keep your long-term goals in mind and maintain that discipline.
One question comes, and the question is, to what extent do you use low-cost index investments for certain asset classes, especially U.S. large cap stocks?
I'll go, and then Dave, if you have anything you want to add. So our investment strategies, the equity strategies is what I'll focus on, is a blend of active and passive. So we believe that a long-term strategy is a blend of those two types of investment strategies. And we do passively manage in the large cap space because those markets are very efficient. Therefore, it is difficult to find an active strategy in large cap that will outperform the benchmark and justify the higher fee that you will pay to employ active management. So we will actively manage in the small and mid cap area of the US market, because we believe that we have identified and we are able to identify active managers that will outperform those markets and justify the fee that we will pay for active management. So our international equity fund is 85% actively managed, and our US equity fund is about 55% actively managed. So it's a blend of both. And then our fixed income fund is 100% actively managed. Do you have anything you want to add?
Yeah, the only thing that I would add is that, as Karen mentioned earlier, we don't invest in funds. So we have index strategies in which they are separate accounts because of our size that can exclude the companies that we screen based upon the ethical exclusions.
One question up earlier, let's pick it up, which was, how does a community access funds for affordable housing, the PSP?
Sure, I'll take that. We have relationships with a number of organizations around the country called Community Development Financial Institutions. As you might expect, there is a lot of bureaucracy involved in building low and moderate income housing, primarily because there are a number of incentives that are provided by the federal government, which make these type of investments attractive for investors. But in order to take advantage of those incentives, you have to meet certain requirements. We don't have the staff to be able to provide that guidance and advice to borrowers. So what we do is we go through community development financial institutions that have the expertise, that they are approached by individuals, developers that want to build low and affordable housing, and they help guide them through the process. Another thing that they do is to arrange for financing for the developers. And we at Wespath serve as a source of that financing. So these community development financial institutions will come to us with a request for financing. They understand what our underwriting criteria are. And when they have an opportunity that they know is in line with the type of investments that we're looking to make, they will offer that to us. So again, we use external parties that are around the country that have good relationships with the regulators and can help those seeking funds to navigate the process.
Thank you, Dave. And one of the questions that we had thought about offering up was the new offering that Wespath is making available. Karen?
Yeah, so this year we are in the process of launching an alternative assets fund. As I noted earlier, our current funds do offer exposure to alternative assets, such as private equity, private real estate. So this new fund would be an option for investors that want a higher allocation to alternative investments than what our current funds have to offer. So there's a little highlight on the screen about this fund that we are in the process of launching. The fund will be managed by Adam Street, who currently manages some of the investments within our funds now. Therefore, we do have an existing relationship with Adam Street. And this slide showcases some of the highlights of this new fund and its strategy. So you can see the fund will offer diversification among strategies, asset classes, and also geography. So for those that would like to learn more, please don't hesitate to reach out to Dustin or myself, and I'm happy to talk with you more about this fund that we are in the process of launching this year.
A question comes in. I'm curious. It seems that an index investment approach would have no screen or company selection process that would attempt to follow our social accepted norms of our faith. Is this correct? Is there an index or comparison tool that can be used for socially responsible investors?
So, as I mentioned, we do follow traditional indexes in terms of our passive strategies. So, for example, one of our passive index investments is the Russell 1000 Value Index. We will hold, in proportion to their weights in the Russell 1000, all of the stocks in that index, except for the ones that we screen out. Now, we do compare our performance to that benchmark, and long term, while it may vary every year, in fact, last year it was a positive, in 2019 it was a negative, but over time it balances out. And historically, depending upon the index, we screen out between 3 and 5% of the stocks. But as I mentioned, these are separately managed accounts. We are big enough, we have enough money invested that Northern Trust and BlackRock, who are our two passive providers, they can completely replicate the index with all of the stocks in the index, except for those that we screen out.
Very good. Good question. I want to highlight, I guess, one thing, which is that our board has worked to create fund offerings through the Kansas Methodist Foundation to serve the bulk of our, entities across the state. We have ability for, especially for larger investments, to do something that moves away from that a little bit, using other funds that are made available through Wespath. So we're trying to find ways to service the broad range of partners that we have, and to do so in ways that are faithful and in ways that are aligning with the social principles and making, doing all manner of good, like John Wesley spoke about, with the resources that we have. Dave, Karen, thank you so much for being with us. And as you shared, if people have questions, we we're happy to receive those and can follow up with you about those. I want to share just a few more things about the Methodist Foundation, and these are really some new impact ministries that we have begun in the course of the last year. So since we had this kind of investment forum a year ago, we've taken on a new program to do training with clergy across our connection. It comes from a grant that Wespath facilitated in cooperation with the Lilly Foundation, but it's resources that are seeking to help our pastors and our churches become more financially healthy themselves and their own families, as well as to strengthen their tool set and their ability to lead in their local context to help our churches be financially healthy. The Lilly and Wespath conviction is that healthy pastors offer good leadership towards healthy congregations. And so that's a program that we have. We're actually taking applications for new people this week. So if you know of someone, a clergy person who would be a good match, we would be honored to have them be a part of that. The second one, as I already shared at the beginning, is the Kansas Methodist Foundation has a different tax exempt status. We no longer are a supporting organization under the conference, but are a public charity ourselves. And that gives us the ability to receive gifts that are coming from an IRA, a traditional IRA, a qualified charitable distribution for those folk who are 70 and a half years of age or older. And so that's a new offering that we are now able to do and can receive those gifts in support of funds that we care for, or we can help make it easy for individuals to give charitably to their church. It cannot go to a donor advised fund, but it can go to other ministries that we're about. And then another new launching was our Learn and Grow webinars. So these are monthly trainings that are geared towards different topics to help people across our connection better understand how to give, how to grow their endowment fund, taxes and Social Security. The next one is going to be in March, on March 29th. Randy Clinkscales from Hays, Kansas, Clinkscales Elder Law Practice, is going to be doing a training, When is the Right Time to Estate Plan, March 29th, 10 a.m. So we have multiple ones that we are putting in place for the coming year. If there are ways that we can serve needs that you see, we'd be happy to know about that and organize some of those trainings. This is the team that works here in our local office. We have I'm grateful for our work that we get to do as a local team in partnership with Wespath. As Karen shared earlier, they provide investment services and we become the local connection to our partners for investment services. Our hope is to be able to connect with you if we don't have investments. If we do have investments with you, we'd love to help figure out how we can serve you better or better understand what you are investing with us and through us. If we don't have investment partnerships with you, we would be honored to visit about that, to have Karen and Dave be involved if that's needed, to share with you more about who we are and how we can serve you so that you have resources to do the ministry that you're about. Ministry grows here is the understanding that we have. There's great capacity in our state, and I think we're in a unique time to be able to use well the resources that we've been entrusted to further ministry. And so on behalf of our team and Karen and Dave, thank you so much for being with us and for your presentation and being a resource for us in the future. And so on behalf of them and our team, our board, thank you so much for being here today for our presentation on the investment forum. We look forward to connecting with you, and blessings for your week. Thank you so much.